Good morning, viewers. It's Thursday morning, January 16, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's Business News. We provide you the latest and updated 5-minute summarized US market wrap. But before we roll on, please do subscribe, share, and like this video. Thank you. Now, let's roll. Just as we had predicted here at Sunny Talks Money, that Wednesday was going to be a huge day, and boy, did it turn out to be so. Stock and bond markets took an ebullient turn on Wednesday, with new inflation data reviving hopes of interest rate cuts and big banks setting a strong tone for earnings season. Relief also came from a long awaited phase deal to end the war in Gaza after 15 months of conflict. A relatively benign December inflation report caused the 10-year Treasury yield to drop by 0.13 percentage point to 4.653%, biggest decline since before yields started to climb rapidly in December 2024. That sent a buy signal to stock investors, and the Dow Jones Industrial Average, S&P 500, and Nasdaq Composite all had the best trading days since the November 6 post-election rally. The December Consumer Price Index showed prices rising 2.9% in the past 12 months, matching forecasts. Also important, core prices, which outstripped volatile food and energy, rose less than expected on both a monthly and yearly basis. The Fed's beige book showed an economic activity increase slightly to moderately in late November and December, with employment ticking up and prices rising moderately. The Dow Jones Industrial Average rose 703 points or 1.65% to 43,221, while the S&P 500 climbed 1.83% to 5,949, and the Nasdaq Composite finished 2.45% higher at 19,511. All three major indexes scored the biggest daily percentage gains since November 6, as did the domestically focused Russell 2000 index or small cap stocks, which climbed 1.99%. Strong earnings reports from some of the nation's biggest financial firms stoked further optimism. Profit at Goldman Sachs more than doubled, while JP Morgan and Wells Fargo both posted hefty forecast beating profit rises from last quarter. Citi swung to a profit and per share earnings beat consensus expectations, while Bank of New York Mellon also exceeded forecasts with 11% revenue growth. Goldman Sachs was up 6.02%, JP Morgan shares rose 1.97%, Wells Fargo jumped 6.69%, Citigroup shot up 6.49%. The S&P 500 Bank Index rallied 3.37%. Stocks tied to consumer spending also rose, surpassing technology companies that have driven most recent rallies. Home Depot and American Express were among the top performers. But even on a day when everything was up, there were notes of caution. JP Morgan chief executive Jamie Dimon highlighted risks of inflationary US policies and geopolitical conflict in his comments about the bank's earnings. In recent market moves, benchmark Treasury yields fell with 10-year yields sinking below 4.7%. Yields fall as prices rise. In currencies, the Bloomberg Dollar Spot Index fell 0.2%. In cryptocurrencies, Bitcoin rose 3.3% to $99,583. And in commodities, West Texas Intermediate crude rose 3.9% to $80.53 a barrel, and spot gold rose 0.7% to $2,696 an ounce. That's it for today, folks. I will see you again tomorrow morning. Happy investing, stay inspired, and remember, it is all about money.